A very good afternoon to you. Asian markets were mixed, with the Nikkei falling on the day. This may have been driven in part by the weaker July Japan export print, which was down 2.6% compared to a market expectation of a decline of 2.1%. As with the US, tech stocks were also seen registering declines. Meanwhile, Chinese indices were described as stable after the People's Bank of China left its loan prime rate unchanged, reinforcing expectations that Beijing will lean more on fiscal policy than rate cuts to support growth. The Nikkei share average declined by 1.51%. The Hang Seng Index rose by 0.17%, while the Shanghai Composite Index advanced by 1.04%. US stocks mostly pulled back in Tuesday's trade, with tech stocks leading the charge downwards. The market was characterized as being in risk-off mode, with the possibility of some profit-taking taking place as well. After a hard run on US markets in recent weeks, market players will be looking forward to getting insights from the Fed minutes that are going to be released later today, as well as continued earnings reports. The Dow Jones Industrial Average made marginal gains, up 0.02%. The S&P 500 lost 0.6%, while the Nasdaq Composite Index declined by 1.5%. Looking at local indicators, we see that the All-Share Index is currently trading down 0.25% at 100,945 index points. The Rand is trading at 17.71 against the US dollar, 20.63 vis-a-vis the euro, and 23.89 against the British pound. Looking at commodities, we see that gold is trading at $3,326 an ounce, platinum at $1,320 an ounce, while Brent crude oil is trading just above $66 a barrel. All right, let's get into conversation now with Zwelakhe Mnguni. He's the Chief Investment Officer at Benguela Global Fund Managers. Thanks very much, Zwelakhe, for joining us. So today is a big day, as market players will be looking to glean some hints from the Federal Open Market Committee, that is the Fed minutes. What are your expectations, and is this the main reason why we've seen market players a little bit hesitant in the market in the last few sessions?
Good afternoon, Nobu. I agree. I think there is a bit of uncertainty around what the Fed decision would be in September. So the market will be looking at the minutes for some kind of clues. In particular, there's been divergence, and I think there were two Fed members that voted for a rate cut. So what one would want to see is what was the basis of their argument, what are the ways the Fed leaning in general. I think there is a challenge that the Fed faces in that it has in the past made a mistake of thinking that inflation is transitory, and then it turned out to be quite a serious problem. That meant that they had to be hiking very fast. On the other side, there is also a need for them to fulfill their mandate of inflation management, but also full employment. And if one looks at those two, the results are actually in opposite direction. Unemployment is starting to pick up, and inflation is still above the 2% target. Because of that, I would say that the indication is that we are probably 50-50 on the potential cut in September. But I would almost say that given the information, we are likely to see that there'll be a cut later in November, maybe.
All right, we wait and see. Here at home, we got the CPI data out for July. On a year-on-year basis, it leapt to 3.5%. That's compared to 3% in the month of June. What's your understanding around what drove that number higher? And do you think that, given the statement that the Reserve Bank made around looking or focusing on the 3% level, do you think that this now means that we might not get a rate cut come September?
Yeah, I think first of all, we must say that given the band, it is still a good print. 3.5 is not bad compared to the 3 to 6%. So your point about the Reserve Bank statements around trying to anchor around 3%, I think it might mean that they would be a lot more cautious to see if inflation is picking up. In particular, I think we've seen food inflation picking up quite aggressively. I mean, beef, veggies, they were all up strongly. But I think beef was the main one that came through at 29% year on year. So I think there is an element of cautiousness that might come through from the Reserve Bank as a result of this print. But taken based on their own target, I think they should still maybe give us a 25 basis points cut.
I would agree with you. Looking at DRD, they came out with their results. DRD Gold, they released their annual results for the period ended June 2025. They're reporting a 26% increase in group revenue of 7.9 billion rand, operating profit up 69%, and they're attributing this in large part to a 31% increase in the average rand gold price. Your thoughts on this particular stock, and not bad numbers?
Yeah, look, these are good numbers. I mean, the cost management was very good, so they only increased cost by about 6%. So they made last year this time about 300,000 rand a kilo, and they are now making 600,000 rand a kilo, largely because of the increased gold price, as you said. But I think the main thing is that they are now trading at about 15, 16 times. Historically, they've been trading between 10 and 12 earnings. So the market might be pricing in a continuation of the trend in the gold price to support the valuation. But overall, it was a fantastic result. They were a bit stingy on the dividend. They paid 40 cents on 260. But nonetheless, it was a good result.
Yeah, indeed. So, Zwelakhe, we've run out of time, so we'll leave it there. But thank you very much for your time and insights. That was Zwelakhe Mnguni. He's the Chief Investment Officer at Benguela Global Fund Managers.